Hey traders, today is Tuesday, November 25th, and I'm Michael Boutros, Senior Market Analyst with StoneX, here for a quick update on the US dollar. It is decision time as the DXY is now testing a resistance pivot we've been tracking for months. The level goes from 100 spot 15. On the weekly chart, it extends into 100 spot 41. That is the objective 2024 swing low and the low close. So we've been butting up against that region. This is the third week this month. Looking for a major inflection off this zone in the days ahead. We would need a resolute weekly close above to really validate the breakout. And that would expose another key region on the upside, 101.55, 101.50. You're looking at the 52-week moving average. You're looking at the 38.2 retracement of the objective yearly range. On the weekly chart, again, we're going to highlight support at the April low week close. That's from back here, and that comes in right around 99.08. Now, when you tighten up the time frame, it gets a little bit closer here, a little tighter on the daily chart. 100 spot 15 into 100 spot 34 is the 2024 low close on a daily basis and the objective swing low. You can see that also represents the August swing high here on that end of the July rally. We peaked out right in the beginning of August there before turning over. This is now the fifth consecutive day we're butting up against that resistance pivot. And again, we would need a close above this zone to validate a breakout of the objective November opening range, which would give us a topside bias and would certainly likely fuel another accelerated rally, okay? 101.32 is the 1618 extension off that low. Channel resistance converges there early next month. So there's a lot of room to the upside if this does break. Near-term support, you're looking at the 200-day moving average here, which is converging just ahead of the objective monthly open. That's 99.75 into 99.81. Now, near-term bullish invalidation for the DXY and the daily chart is right here. November low day close comes in at 99.27. The objective 236 of the advance off that yearly low comes in at 99.40. So you're looking at a 13, 14 pip range of key support there. That converges on basic channel support. Anything below this, again, would suggest that we've broken that multi-month uptrend in the DXY and the potential for a larger setback in the index. So keep in mind, later today, we do get the release of retail sales here in the United States, which will give us a nice update on the consumer, on the health of consumer. Keep in mind a few things. Fed fund futures have now jumped up to 80% likelihood that we're gonna get that interest rate cut next month. Two things to note. The new release came out with the dates for the non-farm payroll figures and the CPI figures for this month. They will be released after the Fed's December 10th interest rate decision. So that means that we're likely have most of the data that we're gonna get before that interest rate release. So you can imagine that the Fed will likely be looking at retail sales for a health of consumer and other metrics, ancillary metrics, to try to help them guide that decision. But as it stands right now, markets have priced that in. We'll try to keep you updated as always on X at MB Forex. Till then, best of luck trading. See you guys tomorrow. Cheers.